Last time we started discussion on chapter 7, which is planning, right? And in planning, we have looked at what is audit risk. We have looked at materiality, right? Today, we are moving on with the other aspect, which is, we said that in deciding to plan for or in planning for audit engagement, there is need for these considerations to be made. The first one is that the auditor should be able to evaluate the audit rate. That is, we must be able to ensure that the audit rate is brought to the lowest acceptable level. Then two, it should examine the risk of material misstatement. Okay, that is in the financial statement that is being prepared or presented to the auditor, that it does not contain any material misstatement. And I explained what we mean by material misstatement in the last class, right? Now, the third part that we also need to consider when you are planning your audit is to be able to ensure that you understand the nature of the client business, whether the client is operating in a manual environment or is operating in a computer-based environment, where everything is done on the system. Now, we are looking at the third part now, the one that has to do with what? Computer. I mean, the nature of the client business in terms of what? Computer in auditing. That is, if your client is operating a business that is computer based or operating in a computer based environment. Okay. Now, computer system affect the audit process in two ways. Okay. One, the auditor may use the computer to perform its audit work. Then two, the client accounting system may be what? Computer based. So what that implies is that if you have a client that is operating in a computer-based environment, two things are involved. One, the ability of the auditor to use computer to obtain audit evidence, right? Then two, the client accounting system will also play an important role, okay, in whether the auditor is going to decide on to use his computer system in that engagement or not. Because if you have a manual environment, yes, you can use computer, but your use of computer will be so suboptimal because most of the information you need, you'll be key it in. You'll be doing like data entry. You'll be gathering information on the field manually, and that will take a lot of time because you have to take everything into the system, and that will take what? A lot of time. But when you have it on the system, or your client operates in a computer-based environment, what happens is that it is easier, okay? It is easier for the auditor to download or to export from the client system or from the client server and be able to do whatever audit procedure he wants to do. So if he wants to now subject it to further substantive procedure, then that can be easily done. As against going to the register, going to the manual record to start from that point, that could be very, very challenging in that instance. Okay. So those are the things that the auditor will do. The other thing the auditor also, when the auditor is considering to use computer in a client environment, then it needs to look at, are there adequate controls? Okay, are there adequate controls for those computer that is being used, for that system that is being used? Are there adequate controls in the server that is being used? Because if everybody can key into if everybody can log, can have access to the server and input any information or whatsoever, what that implies is that the data or the information on the server cannot be trusted. So there has to be some what, some controls, and those controls must be what? Must be effective. Number two, the auditor, when he's conducting the audit also, because the client is operating in a computer-based environment, easily the auditor can deploy what we call computer-assisted audit techniques. Okay? We are going to talk about that. We are going to talk about essentially now. Okay? The auditor will deploy what? The computer-assisted audit techniques. That is a mechanism or a method, is a software, right, that enables the auditor to extract information from the client system directly. Okay? We're going to talk about it in a bit. So those are the things that you need to know now. Now, again, if you are using computer, right, Audit has advanced such that audit firms now, they have a software, audit software that can assist them in what? In audit administration and control. It prepares the timesheet. Okay? It helps them to do what? To develop or to plan their audit plan. Okay, so that in planning their audit, they will be able to assess the risk and materiality assessment is easy for them to do with the use of what? The software. And mind you, the software is not is not just there. What I mean is that somebody has to put, there are parameters you need to set for you to be able to achieve that result that you want from the computer. Because you know, computer is what? Garbage in, garbage out. It's what you key in that's going to bring out to you or for you. So what we are saying here is that there are parameters you need to set on the audit software that will be able to achieve the audit objective for every engagement that the auditor is doing. Okay. Then also the audit software enables the auditor or the audit firm to upload the client financial statement and perform what we call analytical review procedures. That is also possible. Okay, that has been also that has also been what be possible with the aid of the computer. So you just upload, right? The software will help you to do what? Analyze the financial statement, because financial statement that you upload, we always include the comparative, the previous year and the year under review. It's going to perform the analytical review procedures. Okay. Now, what do we mean by that? It's going to carry out some calculate some financial issues. These parameters are already on the software. All you just need to do is just for you to be able to upload or export, okay, or import into that software, and you're able to get what you want from the software. Okay. And also, there are software also that you can use to take samples. All this is I'm saying, they are not robots. Somebody has to activate it. Somebody has to input parameters before you can get the desired output. It's not something that you just buy, you implement, you store, and it starts working automatically. No, somebody has to put the right parameters there. It's just like when you buy your ERP or you buy your accounting software in your organization. It is not the consultant that is going to fix, I mean, it's not like going to manufacture the data for you. His own work is to do what? Maybe to set it up. You are the one that is going to upload your data into it. And as you are uploading your data into it, you are setting parameters. And that way, when you are trying to generate any report, it can give you the report that fits or that suits the purpose. Okay? So that's some of the things that you can do with the computer, especially when you have a client that is operating in a computer-based environment. Now, these are the other things that the auditor will need to do. Control over the auditor's computer system. Now, one thing is very clear. If you work in an audit firm, if you are very observant, when they come to your organization, you see that there are some level of controls on the system they brought to work in your organization. For instance, if you go to them, say that you have a flash, some of them or most of them, they have deactivated the USB port on their laptop. They can't use flash. You cannot use flash on their laptops because flash is a way, it's an avenue in which information on the system can be what? Can be corrupted, can become corrupted. Okay, so they deactivate the port that gives access to USB. So no matter, so what they always ask you to do is to send it as a mail. Okay, they always tell you to do what? To send it as a mail. So from the mail, they can download it as against you giving them flash for them to copy. It doesn't work like that in most audit firms now because they know that there are so many information on that auditor's system and they cannot afford to lose them, even though they've stored them in some other uh, offsite location for if in case of disruption or in case of for backup purposes. But that does not mean that they should leave their system unguarded. So there are some they put in place okay, to ensure that the information on their system is not what is not breached. So some of the controls that they put in place ensures that the client data remain confidential and cannot be accessed by unauthorized persons. So unless you work in an audit firm, you can't have access to the information you have on your auditor's laptop. Okay. Now, audit work held on computer file cannot be lost because they have made room for what? Redundancy. What do I mean by redundancy? They create room for, in case of emergency, you can easily get back that information on the laptop. Even if the laptop is stolen, the information will still be retrieved. Okay. Then for everything that the auditor does, there's what we call an audit trail. Okay. For every work that he does, there's what we call what? An audit trail. What's the essence of the audit trail? The audit trail is there to ensure that you have access because it happens at the back end. You know who carried out or who authorized certain transaction. For instance, if you log on to an auditor's laptop now, there is a password you need to log on to. Some of them have passkey. Okay, some of them have multi-factor authentication. Whatever access that you have to log in as an auditor, right? There is an audit trail on the laptop that will document or capture who who gain access to that information. Who has access to that laptop? It's always there at the back end. It's not for every Tom, Dick, and Harry to be able to see this, unless you are IT savvy, unless you are a computer engineer, right? You will be able to navigate to get to these points that I'm talking about. Okay. So for the accountants, for all those of us that are writing ICAN, all you need to know is that these are some of the controls they put in place to ensure that the system used by the auditor is safeguarded. Nobody's going to ask you to go and explain how you get to audit trail. You can only tell you what are the purposes of audit trail. Okay, but they cannot tell you that how do you navigate to get to audit trail. They will not ask you that in ICANN. So that is outside the syllabus. All you need to know is what I'm sharing with you. All right. Then again, the controls you have on the system, on the computer system, right? They are of two types. You have general controls, you have application controls. Okay? There's what we call general controls, there's what we call what application controls. As the name implies, let me put it in proper perspective. They talk about general controls. They're talking about the entire system, the whole laptop itself, the whole desktop itself. That's general. The control you put around it is what we call general controls. Now, inside the computer system, you have applications on the system. You need to also safeguard those applications on the system. Okay? Because somebody may have access to your laptop, and once you have access to your laptop, it targets the application. Do you understand what I'm saying? So there is need for controls to be in place. So that's why we have the two controls. You have general control and you have application control. So when you talk about general control, what are we talking about? These are controls over the environment in which the computer-based information system is designed, developed, operated, and maintained. So what do we mean? I've explained it that where you have your system, the environment where you keep your system, the office, how safe is the office? Some offices don't have burglary. Some offices don't have, they have bad locks. All right. So if you have your system in an office where there is no burglary, where you don't have a drawer that has lock, where you don't have a door that has lock, and you kept your system on the table, on the desk, and closed for the day, you can't compare the level of control you have in that environment with somebody that has his office well secured with burglary, with good door locks, with a locker or drawer with tape with locks. All right. You can't compare it with those kind of things that we are trying to talk about. All right. So the first thing that we need to do is to check whether those controls that are put in place, for the general controls that are put in place, is working. That's what we mean by what? Whether it is effective. Okay? We will test whether those controls put around it is what is effective. Because if it's not effective, no matter the information that the auditor has obtained or will obtain from the client system, it will not what? It will not be satisfactory because the auditor, you said that audit evidence is what? Should be what? Sufficient and what? Appropriate. So if the audit evidence is not sufficient, sufficient can be in form of what? Quantity. But appropriate, you're talking about the quality of the audit evidence. So if the quality of the information you are getting cannot be trusted, and what do you mean by quality? The source. If the source cannot be trusted, then the auditor will not need to what? To rely on that audit evidence. That is why the auditor will always ensure that in the client computer environment, there is what we call general controls and there's what we call application controls. Okay? Then for the application control, these are controls on the application installed on the client system. These are applications that are installed, controls that are put in place on the applications that are on the what? On the client system. For instance, inventory. Okay, you have an accounting software now, or you have a Sage 100 or Sage 300 on your laptop. That's an application. You have Microsoft Office on your laptop. That's an application. Okay. So what we are saying here is that you have some information that are stored in these two applications that I've just mentioned now. So the information you have there, how secured are they? Can somebody manipulate the information there? You know that when you log on to your laptop or your desktop, that will give you access to all the applications you have there. Now, there should also be some form of control on those applications. When you click on any application, especially for the accounting package or the ERP, you still need to what? To log on again. Sometimes you don't even log on with the same password. You have another password so as to prevent what we call SSO, single point of failure. Okay? You avoid what we call what? Single point of failure. What's single point of failure? What I mean is that you have the same password for instance, you have the same password for your phone. You have the same password for your WhatsApp. You have the same password for your Instagram. You have the same password for your Facebook. So what that means is that if someone should use to have access to your phone, the person can have access to all your applications and even to your bank details that you use the same password for. You know what I'm saying? That's what I mean. That's what I mean by what? Single point of failure. So to avoid single point of failure, right, it's essential that you have what? Different password. So that it makes it difficult for somebody that gain access to your laptop, okay, to be able to have full access to all the information that is stored on your what? On the laptop, okay? So, like I said, the main purpose of the application control is to provide what assurance that process transactions are properly what authorized. If you take your laptop now, you have your ERP on it. On the ERP, you have different modules. You have the inventory module there, right? The inventory module, who has access? What access are we giving to the users of the inventory module? You know, you have some of the access we have what we call the read, you have the modify. Okay. Now, if you give somebody read, it means that the person can only view the inventory information. You cannot alter anything. And that means that you can give that right to people that don't what? That don't that don't post into the inventory module. But when you have people that post into the inventory module, those ones you give them the right to do what? To write. Write here means they can input. But you need to also ensure that you don't give them the right to what? To modify. If you give them the right to modify, what that implies is that they can input something, they can manipulate the information that they have on that module. Yeah, that's what I'm saying. What I'm saying is this: you give somebody the right to input inventory values, and still give the person rights to do what? To change it. When you do that, that means you are giving room for what? For manipulation. So that means that the person that you have explained to that you only have the right to what to input. You're very meticulous when he's keying those things into the system. Because he knows that if he makes any mistake, it needs somebody to override that mistake. You cannot do it alone. That's what I'm trying to say. You are putting control to be that you don't allow the person to be able to do it all alone by himself or herself. You need to carry other people, his line manager along, the supervisors along that. Oh, I made a mistake. Please help me to erase, to delete it. That is what we mean by control. All right. I hope you are getting it. So that is what we mean by control. So application controls, okay, is very, very important because these are the things that the auditor, inside auditor will be what? Will be interested in to be sure that there is internal control over financial reporting. Okay, there is what? Internal control over what? Financial reporting. Internal controls are these controls that I talked about now, that I just explained. Those are the controls that we are talking about. Okay, hope you are getting it. If there's any question, comment, please do let me know. Okay, so what we are saying here is that the auditor should review the application control for each application to establish whether they are effective on paper. Okay, sometimes you can have effective control on paper, but in the real sense of it, it does not exist. Some of the controls we are talking about is this. There is no closing period for your inventory. On a monthly basis, you're supposed to close your inventory or your financial statements. You need to close it on a monthly basis. But the ERP you are using has not been designed or has not been uh, customized, okay, to allow for what? Month-end closing. So what that implies is that if you close your January inventory now, right, and you're in February, somebody can still post into that January. So that implies that it distorts the information you have in what? On the ERP. You know what I'm saying? So that is where these are some of the lapses that the auditor will be looking out for if it exists. All right. Now, this is one area that students don't actually fancy because it is more technical. But ICAN has also increased the percentage. Before it used to be 5%. Now it's 10%. So that means that you can't completely rule it out that the question will come out from this aspect. And when question comes out from this aspect, the question is always direct. It's always what? Direct. So these are, I will take them as what? Low hanging fruit. Low hanging fruit means that these are things you can easily just quickly answer and move on. Because the answers are usually what? Direct as well. Once you have the understanding, you understand the requirement of the question, you attempt it, you are good to go. All right? If you have any question, please do let me know. So that takes us to the next area we are looking at, which is called what? Audit. Audit is still under computer in auditing. Now, what is COBIT? COBIT is what? Control objective for information and related technology. Control objective for information and related what? Technology. Now, let me just summarize what you mean by COBIT. Now, first, one thing you need to realize is that COBIT cannot be seen. You cannot see it. It happens at the what? At the back end. What you were saying that is it like Microsoft Word? No, you cannot see it. It happens at the what? At the back end. There are sort of governance framework, IT governance framework, that ensures that the business objective aligns with the what? With the IT objective. Any business that want to grow in this new dispensation that we find ourselves in this new 21st century, you must incorporate, you must factor in what? IT. If you don't factor in IT, that means the business will be what? Will be local. That means the business will be what? Will be what? Will be a local business. The world is a computer village now. It's a global village now. The world is a global village now. So for you to be able to take advantage of the globalization, there's need for the organization to embrace what? IT. So as you are developing your business objective, you must ensure that your business objective aligns with your IT objective. And for you to be able to achieve your IT objective, you must be able to have in place something like this that we call what? COVID. Okay? This happens at the back end. The main essence of COVID is to ensure what? Data security, data integrity. The main essence of COVID is to ensure what? Data security, data integrity. So that anybody that does business with you, we have the belief and the mindset that, oh, everything is fine with this organization. If I transact business with you now and I put in my card details, my debit card or credit card details, I should go to sleep and say nothing is not no my account or my bank will not be what will not be hacked eventually after I finished the transaction. You understand? So these are some of the things that the COVID tries to what put in place to ensure there is what data security, data integrity is very, very important. You want to buy something on Amazon now, or you're on slot Nigeria, slot phones. You saw an iPhone 15 you want to buy, or 16 you want to buy. You saw it in their store, they say they have 15 left, 15 items or 15 pieces left. You were happy. I will be able to get one. After you've made payment, they now tell you that they're out of stock. How will you feel? Will you be happy? You understand what I'm saying? That is what we mean by what? Data integrity. Somebody that wants to make payment should be able to see the status of the what? Of the transaction, of the item he wants to purchase. Oh, I want to buy one. I say they have 10 left. After I made payment, I should be able to get one. They tell me that, oh, your order will be what? Will be delayed. Not to tell you that, hey, you have made payment, they tell you that you're out of stock. How will you feel? Or perhaps you want to buy a ticket, you want to travel to US or you want to travel to Europe. You have made your payment, you have reserved your seats. They tell you, they showed you before you pay. So these are the seats that are available. These are the types of ticket that they have. You wanted to go for first class or business class. That was available. After you made payment, they tell you that the only one that you can pay for, the one that is available now is economy. How will you feel? That's what we mean by what data integrity. I'm putting percentage to this so that you understand why it is important for us to have this thing on ground. So that's why I said that this thing happened at the back end. It's not something that you see in the what in the front burner. It doesn't jump at you. Okay? It happens at the back end. All right. So what we are saying is that you should be able to restore or give assurance on the transactions that your customer do with on your what on your system. Okay, you're able to give what assurance. Okay, and by assurance, we're talking about the CIA. There's CIA in IT. What's CIA? Confidentiality, integrity, and what availability. Confidentiality, integrity, and what availability. Confidentiality in the sense that you want to buy something on Amazon or Alibaba or AliExpress. You log in with your details, your credit card or your debit card details. You have closed the transaction. You have checked out of that app. After you check out, 2 hours later, you start receiving alert on your phone. Bang, 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 bang. All the money in your account has been emptied. That is not good. That will be by confidentiality. Once you have closed the transaction, your card details should be secured. Nobody else should have access to your bank, your card details. Integrity is what I have explained. You wanted to buy something on Alibaba or slot, you saw 20 there, you made payment, they tell you that, oh, you don't have anything again. That would be bad. You don't have integrity. But that is you have what? You make payment, you're able to obtain what you want to buy. That's integrity. Availability in the sense that at all times, you're able to have access to their site. How many times have you logged on to Amazon and they tell you that site is not available? It hardly happens. Why? Because they have created what redundancies. that in case one of their sites fail, they can connect from another site and do what? Be able to log in. All these things happen in split seconds. You will not even notice it. You won't notice it. Okay? So that is what we mean by COVID. Now, COVID, still explaining COVID, it has the specific components. Okay? It has specific what? Components. What are the components that it has? It has management guidelines. Management guidelines. That is, what do you want? What have you put in place? What do you want to put in place? How do you want to set it? How do you want to develop your own IT objective that will align with your business objective? That's management guideline. Then you have executive summary. Executive summary will explain what are the benefits, what are those things that are in it for the what? The organization. What are those benefits that are in it for the what? For the organization. Okay? Then again, you have what we call the framework. Framework is showing you how you design your what? Your IT infrastructure such that it will accommodate what we call confidentiality, integrity, and availability. That is, everything will be what? Will be intact. There will not be breach of data or data breach. Then control objective. These are the objectives you intend to achieve with those controls you have put in place. Why do you put password? What's the objective of password? To ensure you have what? You restrict access to the system. That's an objective of password. That's what we mean by control objective. That's just a type. Okay. You have audit guidelines. Audit guidelines means after this has been installed, after this has been installed, there should be room where the system can be what? Can be audited. Okay? There should be room where the system can be what? Can be audited. Audited in such a way that it is easy for somebody that is inclined, IT inclined, to log in from the back end and check if everything is in order or not. All right? Then the last one, the implementation tool set. These are the tools, okay? These are the parameters, these are the systems that they are going to put in place to ensure the achievement of the control objective. All those tools, gadgets that they are going to put in place to be able to achieve the objective, right, is what we refer to as what? The implementation tool set. All right? Is there any question? Are we together? Is there any question? Comment? Observation? Are we good to go? Are we good to go?
Yes, please go ahead.
Okay. All right. Thank you
Yes,
so
we are good
much.
to go.
All right. Thank you. So that is for COVID. I hope it's cleared. So let's go to the next area. Still on IT. Let's look at the what we call the computer assisted audit techniques. I've explained it before. I said these are techniques that enable the auditor to use computer system to obtain audit evidence. These are computer techniques. These are techniques used by the auditor to obtain what? Audit evidence. All right. Now, what you need to realize here is that you can only use CAT when the client operates a computer-based environment. Okay, you can only use CAT when the client operates what? A computer-based environment. Now, also, when you're talking about CAT, what it means is that you are going into the client system. You are not just working on the surface, you are going deep because it's going to have as you are going to have access to the client computer system or server. So for you to be able to use CAT, you must have good knowledge of what? SQL. What's SQL? Structured query language. You're able to write computer programs. These are computer programs. These are syntax, computer syntax or programs that you can use to extract information from the system. You have to undergo training on that to be able to use SQL. So your knowledge of SQL will enable the auditor to obtain information from the system. Okay? To obtain what information from the system. So that's what we mean by being inclined IT-wise. So another thing you also need to note here is that if you talk about CAT, CAT are of two types. You have audit software and you have test data. There are two types of audit, there are two types of CAT. Audit software and test data. What is audit software? You use audit software for basically substantive procedure. You use software, you use audit software basically for what? Substantive procedure. Why you use the test data basically for what? For test of controls. You use audit software basically for what? Substantive procedure or test of detailed transaction. Why you use test data for what? Test of what? Controls. So let's start. What do you mean by audit software? These are computer programs used by the auditor to extract information from a client computer-based information system for use in the audit. So like I said, when you talk about audit software, they are what? They are usually, just like software you have on your phone, they are usually what? Installed. Okay? They are installed on your phone, I mean on the laptop. But there are three types of audit software. You have the interrogation software. And interrogation software is a type of audit software that enables the auditor to have access to the client files and record and extract data for auditing. It's a software that does what? That enables the auditor to have access to the client files and what? Record and extract data for auditing. For auditing. So what do we mean by that? So when you talk about the interrogation programs, so what it means is that when you write those programs, those syntax, right? From the programs you have written, it will extract information from the client system on the client files and record. You'll be able to extract information from them. Like I said, it's not every auditor that can do it. For you to be able to do it as an auditor, you must be an IT auditor. That is, you must have CISA, Certified Information System Analyst. Okay? Certified Information System, you must have CISA or you have CISM, Certified Information System Manager. You're able to use, these are the people that can do it. Or those that have training on computer engineering or computer system, computer science from the onset. Otherwise, you won't be able to do it. That's just a fact. It's another field entirely. Okay? So don't say I will not ask you, write your program. They will not ask you. We can only ask you the types of program that you are talking about now. Okay? There's another type also we call the resident code. Okay, there's one we call resident code. What's the resident code? The resident code is the one that is what installed on the client server. Then you call it resident code or embedded software. You install it on the what? On the client server. Once it's installed, it's only the auditor that can use it because once it's installed, it will be programmed in such a way that it will only serve the purpose of the auditor. So anytime the auditor needs information, all the auditor needs to do is to input the program And whatever information he wants to get from the system, he wants to get it online real time. So once it's installed, what that implies is that the auditor will have access to any information you have on it. Anything you post, the auditor can see it. Interactive. Interactive, that one is used for what? For for communication or for conversation. Let me give an instance. Rather for you to be writing programs, right? In this case of interactive software, what this one does is that it will give you like an avenue where you can chat with the what? With the system. For instance, you log into Alibaba now or AliExpress, or you log into Slot, you want to buy something, you see something that will just pop up and start greeting you. Good morning, good afternoon. What can I do for you? What information do you need? Some banks too, they have activated it on their website now. So what does that do? And why am I using all these examples? I want you to understand some of these things you don't need to memorize, you just need to be able to conceptualize it. And that's what I'm trying to do. I'm trying to help us what to conceptualize. You have been seeing some of these things, but you don't really know how they operate. And that is why I'm trying to create a narrative by conceptualizing it for us so that you can be able to see it. Okay? Eh. So interactive software is something like that. So you go to those websites, the thing start chatting. You have a bot, they call it bot, BOT. It starts chatting with you. So what it's trying to do is to be able to assist you in a way. Sometimes you go to some bank websites, especially when they have closed. This bot comes up and try to render on assistance to you, so as to reduce to be able to see if he can assist. And where he cannot assist, he will refer you to what? To call somebody else or to tell you to visit the bank for further directive. As you can see, the interactive software is mainly used for what? Online computer system, which is what I've talked about now. Konga, Jumia, you have them there. They are used for online computer system. Okay? I hope you are getting it. So those are the types of the audit software. Now, the test data, let me explain what that one does. That one is used for what? Test or control. It's used for what? To evaluate test or control. So what it does is this. You would have carried out your own findings about any information. For instance, you want to check whether the information on the inventory module is correct. You will have downloaded the inventory module, whatever report you want from the inventory module, you have downloaded it. You have the report somewhere kept aside. You will now deploy the computer programs to go to that same module, inventory module, and extract that information. So when you extract that information, the output of that information, you're not going to compare it with the result that you have already computed to see whether they are what? They are the same. To see whether they are what? They are the same. And mind you, the test data, you can use it for one purpose at a time. It's not like substantive that you can use for everything. For instance, you cannot use it for inventory and let's say inventory balance, or you want to check the inventory records at offsite location at the same time. You have to do it one at a time. For instance, you want to check your inventory balance at the end of the month. You use it for you implement, you use the test data to check for that. When you want to do that of inventory balance or inventory costing for all the different products that you have to derive another uh, syntax computer program to get that information. You cannot use the same syntax for everything that you do. That's what I'm trying to say. You have your syntax for each particular purpose. That's the difference between this one and audit software. So you use it basically for test of controls. Okay, you use it for what? Test of controls. That is what you use it to do. All right. So with that said, I've talked about CAT, computer assisted audit techniques, and they have told us that it divided into two: audit software and test data. Now let's look at the advantage. What are the advantages of CAT? That is for both of them. One, it gives the auditor an ability to test the completeness and accuracy of electronic processing itself. That one is self-explanatory because you are digging deep into the client system. You are not taking information just from the surface. You are going into the system, into the server to extract information. So there is that assurance that the information you are going to collect is what is complete and is what it is accurate. Okay. Number two advantage of CAT: it allows you to test large number of transactions at a very short time. Like I said, a whole server is made up of billions of data, but with your knowledge of SQL, you can extract the information that you need at a relatively what short time. So what that implies is that the data can be more efficient. The data will be more efficient, and the audit risk. We talk about audit risk. The risk that data will give an inappropriate audit opinion. In the case of using CAT, the risk that data will give an inappropriate opinion will be what? Will be very, very low because it's able to gather as much relevant information as possible. Okay? The other advantage is that it allows the auditor to test the effectiveness of the what? Of the controls. And that can be made possible by the what? By the test data. You're able to test whether the internal control system that you have put in place are working or not. Okay? The number four, there are no errors. Errors are minimized when you use CAT. Errors are what minimized because it's what you key in that is going to give out. Garbage in, garbage out. So if you key in the wrong thing, it's going to give you the wrong thing. So bring out the wrong thing. So errors are what to reduce because they are usually handled by people that are what experts in that field. So these are the advantages. All right. Disadvantages. One, it is cost, it's expensive. The cost of implementation is what? Is highly expensive. Not that it's expensive in that regard. It's expensive because you get it in what? In foreign currency. And then you convert it to Naira because our Naira is fluctuating. It will always be what? Expensive. Number two disadvantage is that there's always need for you to constantly update. And so that when you update, it disrupts some of your processes. You keep updating. You wanted to write a report. You say you must carry out this update. Until when the update is done, you can't write any report. So that update disrupts processes. Number three, there's there's a need for you to train your staff on how to use CAT. I said it. It's not for every Tom, Dick, and Harry. You have to undergo training on how to use it. All right. Number four, reluctance from your client to have this thing installed, to have this CAT installed on their server. Some clients don't want something like this, but they see it as a foreign body to be installed on their server. So that means their information is no longer safe, according to them. As if somebody is spying on them. Nothing is hidden again. So sometimes you face that reluctance or the resistance of them allowing the audit software or the CAT to be installed on their system. Okay, so these are some of the disadvantages. I hope we are cleared. Any question? Any comments? Any observation? Are we good? Any question, comment, observation?
No, sir.
You are good, right? Okay,
For now, sir.
for now, thank you very much. So let's see if we can take a question to address. Let's see if we can take a question to address these concerns. Okay, I'm looking through the question. I'm going to share with us now. All right, just hold on while the thing pops up. Just hold on. I'm looking through the. I'm trying to open the question. Just hold on. You have all the questions with you. We have shared these questions with you. Myself and the other facilitator, we have shared this question with you. All the questions. So I'm looking through one of them to see whether we can see a question that relates to what we are intend to do. Okay. Okay. So I think I've seen a question now, and that question is November 2014. Question number 7. Just hold on. I will share with us now. Question number 7, November 2014. Just a minute. I'm trying to share it. But we don't have time. So I will just read the question, we go to the solution, then we are done with it. We do have time. Okay? But I just need to, because that is the tradition. We need to look at the question so that we know we have an understanding of what we're talking about. Okay? Just hold on. I'm coming. All right. Let me stop this one. Let me share this one. Like I said, questions from this chapter, right? Or from this aspect is very direct. Nobody will ask you complex question. Look at the question now. This is question number 7, November 2014. The reliability of computer-assisted audit techniques should be considered by auditor when planning the nature, extent, and timing of tests in an audit. Auditors must determine their testing strategies, which will depend on their choice of either using a manual testing method or a computer-assisted method. Required. Explain 5 factors that will determine auditor's choice of method of testing in planning an audit in a computer environment. I told you it's very straightforward. Number 2, identify 5 solutions to loss of what? Audit trail. Right? Without further ado, let's jump at the answer. Okay? Because we don't have time. I've explained most of these things to us, but let's go to the answer and see how it's being addressed because it's very, very key. Okay? Just a moment. I'm going there now. So get there. Question 7. Okay. So here we are. You can see my screen. This question 7. Computer assisted audit techniques. Auditor's choice of method of testing during the planning of audits in a computer environment will be determined by the following factors. Number 1, practicability of performing audit tests manually. I've talked about that before. Okay. Many computer-based accounting systems perform functions for which no visible evidence is feasible. In this regard, it will not be advisable for the auditor to use manual testing method. That's self-explanatory, right? Second one, you need to consider time availability. Since the auditor has a report within a short time scale, he may choose to use cards as they are quicker to apply, even though manual method may be more practical and cheaper. We talked about that earlier on. 3, computer facilities availability. When using CAT, auditors will need to ensure that the required data, computer files, and programs are available. I've talked about that also some in the course of the discussion. Next one, expertise and experience. Auditors require at least a basic understanding of fundamentals of computer processing because they are using the computer to assist them in performing the audit test before contemplating using CAT. I talked about having knowledge in what? SQL. Then the fifth one, reliance on internal audit function. Where CAT is used by a suitably trained internal auditor, it may be of significant importance, it may be of significant assistance. The extent of which the external auditor are able to reduce the level of test by taking account of computer audit techniques performed by the internal auditor will depend on whether assessments, will depend on their assessment of the independence and effectiveness of the internal audit function. The next one, another consideration, volume of client business. It is not worthwhile to use CAT when the volume of client business is small. I talk about large data that time. You can process large data. So you can see it's the same thing. We look at the way they frame the question. You understand what I'm saying? The second part, what are the solutions to loss of audit trail? These are the solutions. One, use of computer-assisted audit techniques to assess reliability. Two, I'll talk about audit trail. Audit trail, I've explained it earlier. Two, testing on a total basis and ignoring individual items to assess reports. Three, closer coordination between internal and external auditor to bridge gap in compliance tests. As at 2014, they were still using compliance tests. But in 2025, we don't call it compliance testing, we call it what? Test of controls. Do you understand? Test of control. Gaps in what? Test of controls. You understand what I'm saying? You need to be intentional when you are reading. All right. This was 2014. Syllabus has changed 3 times after that time. All right. So next one, arranging for special printout of individual information for the auditor to attempt to recreate transaction trail. What that one implies is that the auditor requests for a payment voucher, and after he receives it, what will he do? He will initiate a transaction that relates to payment. He wants to make payment and key in the same parameters, the same information, and print out whether it's going to achieve the same result as the already printed out payment voucher. Okay? Clerical recreation of individual items of data for comparison with computer-generated total. Remember, I talked about that inventory information, inventory report. You have downloaded it, you have it somewhere. You now use your card to check whether it is the same. Is what they are talking about there. Okay? Program interrogation facilities, whereby records held on magnetic files are printed on a selective basis by means of direct request on those files. This one is talking about test data. It's talking about what? Test data. So rather than for you to print everything, you just focus on the ones that are related to that particular sample that you are trying to test. Are we all together? Is there any question on this? Any question, comment, observation? Are we good to go? You are not talking, no.
Yes, sir.
Okay. Let's go back to what we are doing. Okay, let's go back. Let's go back. So, in terms of any question, we are done with chapter 7. We are going to the next chapter. This is chapter 8, audit evidence. We cannot finish this one today, but we need to start. All right. Now, this is by far the most important aspect of the syllabus, of your AAA syllabus. Why did I say so? This chapter is the most voluminous aspect of your syllabus. Go and check it. If you have your ICAN study text, the 2021, go and check the number of pages that you use to discuss audit evidence. You agree with me that it is by far the most voluminous. Number two, this is the most important aspect of an audit engagement, because the opinion that is formed by the auditor at the end of the engagement is based on the what? Evidence gathered or evidence obtained. Are you with me? Number three, this chapter cannot be overemphasized because there are so many things that we need to explain, okay, that will throw more light, that will give you more insight into how the engagement is done, how to obtain information, what information to be obtained. We'll be looking at all of that in this chapter. So this chapter, audit evidence, the relevant auditing standard is ISA 500 that talks about audit evidence, ISA 500. So what is audit evidence? According to ISA 500, audit evidence refers to any information, refers to what? Any information used by the auditor to arrive at the opinion on which his report is based. Any information used by the auditor to arrive at the opinion on which his report is based is known as what? Audit evidence. I hope that is clear. I hope we understand that. Now, one thing you need to know is that for the auditor to be able to even obtain audit evidence from a client business, he needs to carry out two tests. For the auditor to be able to rely on the information he wants to obtain from a client business, he needs to carry out two tests. What are the two tests? Test of controls and test of detailed transaction. Okay, the test of control, the main essence of the test of control is to ensure that the internal control system is effective and efficient. Okay, while test of details transaction, his intention is to ensure that the audit evidence gathered support the what? Audit opinion. That is, after you have tested that the internal control system is working, you need to obtain what? Empirical evidence, that is documentary evidence. You said that you have an accounting policy that says that every procurement above 1 million naira, you must attach a local purchase order. So your substantive test, your test of detailed transaction will now enable the auditor to go into the purchase ledger or purchase schedule and pick out transactions, procurement that are above 1 million naira and see whether they attach local purchase order to those procurement above 1 million naira. I hope that is clear. Then there's another test also that we call substantive procedure. So the substantive procedure is a combination of test of detailed transaction and analytical review procedure. Test of detailed transaction and analytical review procedures. Okay? That makes up what we call what? Substantive procedure. I hope that is clear. All right. So those are the tests that will be carried out by the auditor. We call it audit test. Okay, before you can rely on the information that is obtainable from a client environment. Okay? Now, why are these tests necessary? These tests are necessary because the auditor is trying to reduce the risk of material misstatement on the financial statement. The auditor is trying to do what? To reduce the risk of material misstatement on the financial statement examined and to ensure that the audit opinion is also what? Is correct. That is, trying to reduce his what? Audit risk. He's trying to do what? Reduce his what? His audit risk. Okay? Now, the auditor, when he's using audit evidence, right? Audit evidence has two main characteristics. What are the characteristics? Sufficiency and appropriateness. Lọ ṣe ní ṣọ́ọ̀ṣì. Tó lè fi ṣọ́ọ̀ṣì rẹ̀. Láti rẹ̀. Ìfẹ́. When we change it for you, we break it into two. I don't have change. All right, bye-bye. You're looking funny. Yeah, bye-bye, bye-bye. Hey, my lord. Finish it. Where is it? Okay. So I was saying that there are two characteristics of audit evidence. What are the two characteristics? Sufficiency and appropriateness. Sufficiency and appropriateness. Okay. So what is sufficiency? Sufficiency has to do with what? Quantity. The amount of information obtained by the auditor will go a long way in assisting the auditor to reduce his what? Audit risk. What is appropriateness? Appropriateness has to do with what? Quality. The quality of audit evidence will also go a long way in reducing the what? The audit risk. Mind you, appropriateness is further divided into two. There are other two characteristics of appropriateness. We have relevance and what? Reliability. We have what we call relevance and what? Reliability. What is relevance? Relevance is the ability of information obtained to be related to that particular engagement. You're able to obtain information that is related to that particular engagement. That is relevance. Then reliability is talking about the source of the information. How credible is the source of the information? How credible is the source of the what? The information. Okay. Now, when you talk about the source of the information, you have to test the source. How do you test the source of the information? We are talking about generalization of audit evidence. This is it here. Generalization of audit evidence. How do you test the reliability? You have to ensure these are possible. Okay? There are 5 of them, so let's look at them one after the other. Number 1, for you to be sure that the evidence is reliable, audit evidence obtained by the auditor. Audit evidence obtained by the auditor is more reliable than audit evidence obtained by inference. Look at it here. Audit evidence obtained by the auditor is more reliable than audit evidence obtained by inference or indirectly. And the auditor that is doing the work, if he is able to obtain information, whatever information he obtained by himself is more reliable than any other information that is presented. That we are saying. Number 2, audit evidence obtained from an independent source, okay, is more reliable than any evidence obtained from the client. Especially when you obtain information from a knowledgeable independent source, somebody outside the organization. You obtain information from such person. The information you obtained used to be what? Tend to be what? More reliable, because it will give you everything that you need without any, because it does not have any obligation to the client. It does not hold any recourse to them. So whatever information is going to give you will be what? Will be correct. But your clients, sometimes they are intentional when they want to give information because they don't know to what extent you want to use that information. So sometimes they will give you information in bits, half information. Number 3, internally generated audit evidence is more reliable when the related controls are effective. Like I said, internal control by financial reporting. Internal, the audit evidence obtained internally will be more reliable when the controls are what? Are effective. Okay. Number 4, audit evidence obtained in documentary form is more reliable than audit evidence obtained in what? In oral form. So you obtain information in a documentary form. it cannot be denied. Okay? You cannot deny it. Because it cannot be denied, it's more reliable than information obtained in an oral form. Because oral information can be denied. I never said so. That's not what I meant. But if it's documented in black and white, it cannot be what? Repudiated. Okay? Number 5, audit evidence obtained in original documents is more reliable than audit evidence obtained in photocopies. So you know that photocopies sometimes can become what? Adulterated, can be tampered with. You only have one copy. Original is always in one copy. It's just in a copy. But duplicate can be in several copies. And they can amend any information when it's duplicated. I've heard of Oluwole in Nigeria, in Lagos State before. That's an area notorious for what? Doctoring, manipulating documents to suit different purposes. All right? Hope that is clear. All right, so let's go up. Let's go back to where we were discussing. I just need to explain that before we continue. Okay, so we are talking about, I want to come back to this one. Okay, use the work of an expert. I'll come back to this. Let's go on to the method of obtaining audit evidence. We'll come back to that. There are 7 methods used by the auditor to obtain audit evidence. The more method used by the auditor, the more reliable the audit evidence becomes. If the auditor is able to use all the 7, that means the audit evidence is going to obtain be more reliable and vice versa. In no particular order, let's look at them one after the other. The first one is called inspection. Inspection is looking at an item such as assets, documents, and entries of what? Accounting records. We are checking. Okay? That's a method of what? Obtaining what? Audit evidence. 2, observation. It has to do with when the auditor is present, when an action or an activity is being carried out. Auditor is present when an activity is being carried out, and the auditor documents what he sees. We call it observation. An example is what? During stock count. External auditor will just be watching how this count is being done. Inquiry is a method of seeking information from knowledgeable person inside or outside the entity. You're asking questions from the process owners. You're asking questions. How is this done? How is that done? It's called inquiry. Then we have external confirmation. It's another method of obtaining audit evidence. That is seeking confirmation from a third party. For instance, you circularize your debtors. It's a type of what? External confirmation. You obtain certificate of valuation from your valuers when you have tested your asset for impairment. It's an external confirmation. Okay? You write letter to the bank to confirm the balances that they have. It's an external confirmation in the financial statement. Then you have the calculation. The calculation is another method of obtaining audit evidence by checking the mathematical accuracy of documents or records. You have to add up, you have to ensure that the calculations are correct. For instance, they posted their depreciation, and you saw that some of those assets were acquired in the course of the year. In fact, some were acquired in the middle of the month, but they calculated it for 1 month. So you need to recalculate and see that you'll be half a month, not 1 month, 15 days. The performance is another method of obtaining audit evidence where the auditor independently carry out procedures or controls which are originally performed by the client. So the clients have already processed a payment voucher. You now say that, okay, let me also try when I'm going to achieve the same result. What is he trying to do at that point? He's trying to look out for if there are gaps or process inadequacies. Okay? Then we have the last one, which is analytical procedure. It's another method of obtaining evidence. This shows possible relationship between financial and non-financial data. Example, when you are using ratios, okay? Asset ratio, inventory turnover, all these are ratios, right? Or trend analysis. These are the method of obtaining audit evidence. You're able to combine all the 7, the better for the auditor. But each of them are what? Mutually exclusive. All right? Any question before we proceed? Any question, comment? Okay, let's look at this one before we go to that one. Let's look at that one that I have before this. Using the work of an ex, use the use of an expert by management. Who is an expert? An expert is someone that has competence in other field outside accounting and audit. That is an expert. Okay. Example: lawyers, actuaries, architects, surveyors, gemologists. All these people are what? Are experts. Okay. There are two types of experts. We have auditors experts and we have management experts. What we are talking about here is management expert. Okay. So when assessing the objectivity of an expert employed by management, issues for the auditor to consider will include whether the expert has a financial interest in the audit client. For instance, whether he's a shareholder. As the auditor is using experts, the management will also use experts, especially if sometimes that has to do with their legal issue. We have lawyers, okay? Lawyers are experts. Another thing the auditor will also check is the expert has his personal, whether he has a personal relationship with the senior management in the client. That is, whether there is a relationship that exists between the management expert and the senior management. Three, the auditor will also check whether the audit fees, whether the fees paid to the expert are what? Are at what? Arm's length. That is, it's not a related party transaction. We know we said that for all related party transactions, they must be what? Disclosed and accounted for. So for the auditor to be sure that it's not a related party transaction, it must be at what? At arm's length, otherwise known as what? At fair commercial price. All right? Then another thing you also need to look at is when assessing whether the work of management expert provides sufficient and appropriate evidence for this purpose, you must see that the information serves the external auditor's objective. Information provided by the management expert serves the internal audit and the external auditor's objective. Then another thing of the way of concern also is that the external auditor will need to review the terms on which the expert was engaged. Okay, to be sure whether the essence of this is to be sure whether we can rely on the report presented by the management expert. Then the auditor will also need to look at the report of the expert, whether the report is far-reaching and a conclusion was agreed. All right. Then the auditor will need to check the method used by the expert. For instance, if he's talking about valuation of investment property, the method of valuation used should be consistent with the requirement of IAS 40. Okay. Then also, the auditor will also check if the expert has been used to provide evaluation. The date of evaluation should be close to the end of the financial year of the audit client. So that it will be what? It will be current. Right? I hope we are clear with that. So let's continue with what we are. Let's go to the next one. Now, I was talking about financial statement assertion when we discuss audit approach, especially when we're talking about the statement of financial position audit approach. I only hinted us that we are going to talk more about financial statement assertion when we get to what's it called? Audit evidence. Now we are in audit evidence now. I'm going to discuss extensively what we mean by what financial statement assertion. What are financial statement assertions? Financial statement assertions are statements made by management confirming that the financial statement presented to the auditor do not contain any material misstatement. These are statements made by management to the auditor that the financial statement presented do not contain any material misstatement. And there are three types of financial statement assertion. We have assertion based on transactions and events. We have assertion based on presentation and disclosure. We have assertion based on account balances. Okay? Now, these three assertions, right, have been compressed into what we have here. Have been what? Compressed into what we have here. Let me explain. So, if you look at the assertion based on transactions and events, one thing is common to the three assertions. One of them is completeness. One of them is what? Completeness. That is, you have to ensure that all information necessary to have been recorded have been recorded. That's what we mean by completeness. For instance, under the assertion based on transactions and events, you made payment, right? You made an advance payment. But when the items were received, did you receive all the relevant documents to back up the transactions? For instance, receipt, parking list, way bill, if there's any warranty, did you receive everything? That will be my completeness. Do you understand? Completeness under assertion based on account balances. That is that one that relates to the statement of financial position. You must ensure that every information that's supposed to have been recorded has been what has been recorded. Especially you bought an asset. And you bought an asset and also you're looking at a sub property plant and equipment. You bought a generator. How much? 50 million. The later ask you, how did you arrive at 50 million? You say that that is the invoice value of the asset. You know that is not correct. IAS 16 that talks about IAS 16 that talks about property plant and equipment states that all the costs incidental to putting that asset to use must be factored in when you are what deriving the value or the amount or the cost of that asset. So that means that the cost of logistics, transportation, commissioning, the commissioning, servicing, everything must be added together to arrive at the total cost of the asset. So that's what we mean by completeness. The completeness under presentation and disclosure means that all disclosures must be what? Must be complete. So that somebody that is reading it can have an understanding that it is what? It is correct. I hope that is clear. So completeness is common to all the three. Occurrence is relating to only the assertion based on transactions and events. And what that means is that whether those transactions posted in their financial statements actually exist. Whether those transactions posted actually what exist or occur. We talk about what occurrence. Accuracy, we are talking about ensuring that all transactions posted on the financial statements are posted correctly. The amounts are what are not transposed. They are posted correctly. Then we have classification and understandability. Classification and understandability is under assertion based on presentation and disclosure. Okay. However, classification alone is on what? We are talking about classification alone. That one is about assertion based on transactions and events. And that says that ensure that all transactions are posted into the appropriate account heads. Are posted into what? Their correct account heads. But in the case of classification and understandability, what we are saying here is that, which relates to assertion based on presentation and disclosure, is that information is appropriately presented and described, and disclosures are clear. That presentation and disclosure is talking about what? Information needs to be what? Needs to be clearly stated and be understood by the users of the financial information. Are we together? Valuation and allocation is another one that relates to the assertion based on account balances that states that all assets, liabilities, and equity interests are recorded at appropriate amounts, and any resulting valuation or allocation adjustments are appropriately recorded. What are we talking about here? We are testing IAS 36 impairment. We are testing what? IAS 36 what? Impairment. What does this say? It states that You must, as an organization, you must test your assets at least once a year against what? Impairment. So when you have impairment, you need to make adjustments and write it where it's supposed, it where it's supposed to be. That's what we are talking about under this. Number 6 is talking about right and obligation. Right and obligation is also talking about transaction based on account balances, and it relates to asset and liabilities. Right is to asset, obligation is to liability. Right, what is an asset? Asset is anything that you use by an organization to generate what? Economic benefits or value. We call it an asset. Sometimes you don't have the asset, but you have released the asset. IFRS 16 says that you must not, when you have leased an asset, what you are going to recognize is the lease, the amount that you pay as lease. You're not going to put in, you're not going to put what we call the total amount, the real cost of the asset, because you are not the owner of the asset, you only lease it. And you're only paying lease renters. Whether it's an operational lease, whether it's an operating lease or a finance lease, right? You have to state whatever the lease is. Okay? Then your obligation is talking about liabilities. You don't want to check whether you're making your obligations as possible. You took a loan from the bank. Are you paying as at when due? So the entity owns or controls the asset to disclose. The entity owns or controls the asset to disclose assets and disclose liabilities are those of the what? Of the entity. Those are the assertions. Any question, comment, observation before we proceed? Any question, comment before we proceed? We still continue, right? We have existence. Existence is talking about what? The one on assertion based on account balances. And that's to the author will test whether those asset, liabilities, and equity interests actually exist. So how do you test liabilities? You test liabilities by looking at what? The document. For instance, you want to test whether a loan exists, you have to request for the loan agreement. Then you have what we call cutoff. Cutoff is talking about what? Ensuring that transactions are posted into the right accounting period. Right? They are posted into the what? Into the right accounting period. That is cutoff. You don't expect to have a posting of 2nd or 3rd January 2025 in 31st December 2024. It shouldn't be. You understand? Any question, comment, observation? Are we good to go? So let's continue. Go to the next area, directional testing. Directional testing is an audit approach that was developed in the 1980s. What does it mean? What this approach is saying here is that if there is an error on the debit side, that every error or misstatement always has what? Two sides, the debit and the credit. That's what it's talking about. Every error or misstatement always have what? Two sides, debit and credit. So they always balance itself. That's what it's trying to talk about. It's not always a one-sided misstatement. It's always what? A two-sided misstatement. That's what we mean by directional testing. Okay? So what are the advantages of directional testing? It helps the auditor to clarify the audit objective. How? It helps the auditor to clarify the audit objective in the sense that the essence of the audit objective is to ensure that there is risk. The risk of material misstatement is what? Is very, very low. The auditor will ensure that the risk is what? Is very, very low. Two, the second advantage, it focuses the audit work on areas of high audit risk. Areas where you have risk of material misstatement is where the auditor is going to focus on. Thirdly, it links together the result of audit test. That is self-explanatory, right? That's the example they are giving here. I've explained it, so I don't need to bother myself with that, all right? That's what they are trying to explain. Then we have what we call the analytical review procedures, ISA 520. I've explained what we mean by analytical review procedures. I said it shows related relationship between financial and non-financial data. Analytical review procedure is an additional level of obtaining audit evidence. is to corroborate the initial evidence you have gathered. You have obtained the financial statement. You want to confirm whether the financial statement is correct. You carry out your analytical review procedure. You carry out two issues. But then you compute two issues, you show you whether there are errors in the financial statement or not. You carry out your trend analysis. It will show you whether there are issues in the financial statement or not. For instance, you saw that in sales of 2023 was higher, 2024 was lower. You need to investigate. Have they posted the right amount, or was there any major issue that resulted in the reduction in the sales balance of sales figure? That is why it's very, very important. Okay, so that is what you need to know about the analytical review procedures. All right, I've talked about then you have three stages of analytical review procedures. We have the preliminary analytical review, we have the substantive analytical procedures, and we have the final analytical review procedures. The preliminary one is where the editor tries to obtain information, okay, about the what? About how the business operates. For instance, it obtains information of previous accounting statements, previous information about the organization. Then substantive analytical procedure is where the editor considers whether it's going to use analytical procedures, especially to ensure that the risk of material misstatement is acceptably what? Low. All right. Then the third one is called final analytical review procedure. So in that instance, the auditor performs an overall review of financial statements at the end of the audit to assess whether they are consistent with the auditor's understanding of the entity. Okay, the whole essence of this is to be sure that at the end of the audit, the information the auditor is going to base the opinion on is what is reliable. That is the whole essence. Okay, so that is that. Any question, comment, observation? Are we good to go? Let's look at the next area. Any question? Any question? We are good to go. Okay, let's go to the next area. Audit documentation or audit working paper. We call it ISA 230. That is the relevant auditing standard. Then you call it audit documentation, you call it audit working paper. Okay? What does it mean? Audit working paper or audit documentation refers to all the information obtained by the auditor, all the information obtained by the auditor that facilitates his audit opinion. You can see that that definition is similar to audit evidence. Yes, because it's also part of the audit evidence. Okay, it's also part of the what? Audit evidence. So the audit documentation provides a record of that audit documentation, audit working paper. We show the audit procedure performed, we show the evidence obtained, we show the conclusion reached, we state whether a sufficient and appropriate record of the basis of the audit report, whether they have obtained sufficient and appropriate audit record for the audit report. Okay? Now, what you also need to realize here is that the audit documentation is also important, and the auditor needs to prepare documentation on a timely basis. Okay, sufficient to enable an experienced auditor with no previous connection with that audit to understand the nature, timing, extent of the audit procedure and the result of those procedures and the audit evidence obtained. Okay, and to ensure that similar matters that arose during the audit and the conclusions reached thereon. What we are saying here is that the audit documentation must be prepared on or before 60 days after the completion of the audit. This one is very, very important. You must ensure that the audit documentation is compiled on or before 60 days after the audit has been completed. Okay? So that is some other things you need to know. Okay, let's go on. Okay. Now, when you prepare a good audit documentation, what it does is that it helps the auditor in following areas. One, it enhances the quality of the audit. Two, it facilitates the effective review and evaluation of the audit evidence obtained and conclusions reached before the audit report is finalized. That's self-explanatory. Three, it assists the audit team to plan and perform the audit work. Four, it assists supervisors in directing and supervising the audit work. So with the documentation, you're able to know where to go and how you are going to share the responsibilities. Five, it ensures members of the audit team are accountable for their work, but they have already shared the work, the responsibilities. So they are accountable to their own bit. Six, keeping record of matters of continuing significance for future audits. Seven, enable an experienced auditor with no previous connection with the audit to conduct a quality control review. You have looked at that in chapter 5 in previous classes, okay? If you are not clear with that one, you can refer to the lecture notes or lecture recording that was shared, all right? Any questions so far? Any question? Any comments? Any observation? Are we good to go? Are we together? Please
Yes.
respond though. Okay. So everybody is clear. That's good. All right, let's continue. We are looking at the form, content, and extent of any documentation. Okay, all documentation may be recorded on paper or in an electronic format. Okay, the documentation for a specific engagement is assembled in an audit file. The precise content of the audit working paper varies depending on the nature and size of the client and the complexity of the audit performed. Okay, but in every audit documentation, you have the following information contained therein. You have the audit programs, the analysis, summary of significant matters, letters of confirmation and representation, checklist, audit checklist, and any audit correspondence. Okay, all of these are usually contained in a file. But now we don't audit firms have stepped up. They have evolved. So what they do basically now is what? They use the computer. Okay? So in looking at the content of the audit documentation, they are divided into what? Into two. There are two types of audit files. You have the permanent audit file and you have the current audit file. Why is it called permanent audit file? Permanent audit file means that there are files that record information that are likely to be of significance for every annual audit. There are files that contains record of information that are likely to be used for more than one audit because they don't change. We call them permanent file or permanent audit file. So examples of information that are contained in the permanent audit file are the legal constitution of the company. What is the legal constitution of the company? The memoirs, that is memorandum of association and article of association. Those are the constitution of the company. Two, other important legal documents such as loan agreement, past loan agreement. Three, a summary or history or development of the ownership of the business. That one cannot change also. It's what is there is forever. Four, a record of accounting system and procedures used by the client. That one too cannot change every year. Okay. Five, copies of past or previous financial statements. It's also there. Okay. That's some of the information that you have in the permanent audit file. However, in the current audit file, it contains information that are relevant to the current year audit. It contains information that are relevant to the current year audit. Okay, some information that you have there. Okay, you have the final financial statement and auditor's report. It's contained in the current audit file. Two, a summary of the audit adjustments, including those not included in the final reported figures. Audit adjustments. Okay. 3, audit planning documentation is there. The audit plan is there. 4, audit control material. Audit control material are those time budget, review points for consideration, okay, are contained there. 5, details of items for testing, their results, the test performed and the results obtained. Okay. Then lastly, you have the accounting schedules, all those schedules, purchase schedule, sales schedule, all those schedules you have there contained. Okay. Those are the types of the audit file. Any question? Any comment? Okay. Now, what are the characteristics of an audit file or audit documentation? And a typical, if you pick a typical audit working paper, what are the likely things you are going to see there? We call it characteristics. So a good audit working paper, we have what? The name of the client. The name of the client must be boldly written. 2, the accounting date, the year under review must be boldly written on it. A file reference, if there is a need for a reference made, whether to previous audit working paper or not, they need to put it there. And also for easy retrieval. 4, the name of the person preparing the audit working paper. 5, the date the paper was prepared. 6, the name of the person reviewing the work and the extent of such review. Next, the date of the review. Next one, a key to explanation of the audit ticks or symbols used in the working paper. What do you mean by audit ticks? Audit ticks are more like ways the auditor or method or techniques used by the auditor to record information for their own consumption. Okay? So they will have a key or they will have keys. Keys here means explanation, the meaning, what all those acronyms used in the audit working paper, what do they mean? We call them what? Keys. Okay? So the audit ticks. There are some, for instance, if the financial statement presented, let's say the information in the receivables tallies with what the auditor can also receive, is going to use an acronym or use a symbol to denote that is correct. So that symbol that he uses, what does that symbol signify? The explanation of that symbol, the meaning of that symbol needs to be what? Explained. You understand? Then the auditor's conclusion on the area. Okay? The auditor conclusion on the what? On the area. Now, like I said, all this working paper now, I said it earlier, it has become what? Digitized. It's now in electronic format. Okay? Because they are in electronic format, it has improved the efficiency of preparing audit working papers. So what are the advantages of the computer-generated audit working papers for the auditor? One, the audit working papers are now neater, easier to read, and in a standardized format. Before now, the audit working paper used to be very rough and dirty because it will be handled by many people. But now, since everything is on the system, it appears to be what? Well presented, neater, and easy to read. 2, there is a lower risk of error by the auditor in preparing adjustments. Why? Because any error will easily be spot on because it's using computer. It will be easily detected. Thirdly, the audit review process by senior managers or audit partner can be carried out remotely. Before now, you have to come back and review the paper. But now with the advancement in technology, IT technology, right? Or advancement in IT, it can be done what? Remotely. Using what? Virtual. Zoom, Skype, Team, Google Meet to get that done. Then the automatic processing of adjustment by the auditors using software may result in significant savings of time. Now you use software to make what? Audit adjustments. So it saves a lot of time, even though you are the one that's going to put the parameters in place, but it still saves a lot of time. All right. Now let's look at this. There's a question that is here. I want us to answer. Who owns the audit working paper? I want us to answer before we proceed. Who is the owner of the audit working paper? I want somebody in the class to give me the answer.
The auditor.
Are you sure?
Yes.
How sure are you? Is that your final answer?
Very sure.
You are very sure. Thank you. You are
Yes.
absolutely correct. The ownership of the audit working paper reserves with the what? With the audit firm. The audit firm owns the audit working paper. At no point should the client held on to the audit working paper. It belongs to the what? It's the property of the what? Of the audit firms. Okay? And those audit working paper must be kept in line with what? Agreed document retention period. Document retention period. For instance, the client financial statements, they don't expire. So you need to keep archiving them. Okay? You need to do what? Keep archiving them. And it should be easily what? Retrievable. They should be what? Easily retrievable. I've worked in an organization before when we had issues and we asked the auditor to go and present us the audit working paper for 30 years before now, 30 years ago. And he brought it. It should be easily retrievable. All right? Thank you very much. So let's continue. We are going to the next area, still under audit evidence. It's called ISA 550, talking about what? Related party and related party transactions. Okay? What does it mean? The main essence of this is that you cannot rule out related party and related party transactions. But what the standard expects us to do is that at any time you have related party or related party transaction, it is mandatory, it is expected that you properly disclose them. Properly what? Disclose them. The nature of the transaction, the nature of the related party, you have to state their names and the nature. Okay? So the objective of the auditor with regards to 550 are to obtain an understanding of the entity's related party relationship and transaction. I've explained that. Two, to obtain sufficient and appropriate audit evidence about whether related party relationship and transactions have been appropriately identified, accounted for, and disclosed in the financial statement. Three, the auditor is able to obtain or recognize fraud risk factors associated with related party transactions and what? Relationship. There are fraud risk that are associated with related party transactions and what? Relationship. Then lastly, the auditor will be able to conclude whether the financial statement achieve fair presentation in relation to related party transactions and relations. What does that mean? That is, they are done at what? Arm's length transaction. They are not done with what? With the intention that they are what? They are related. There's no familiarity in terms of what? Cost. Okay? So the IS 550 requires the auditor to perform risk assessment procedure in order to understand the entity's related party transactions and relationship. When we talk about procedures, they must be in this order. One, the auditor must consider the risk of material misstatement due to fraud or error arising from related party relationship and transaction. That is self-explanatory. Two, he must inquire into the identity, relationship, and nature of transaction with the related party. Three, you must identify the accounting for and disclosure for related party relationship and transaction. How did they treat it? For instance, the transaction that occurred between them must have cost like 50 million, but they inflated it to 100 million. Okay? That's what we are talking about. The auditor must be able to check the authorization and approval of significant related party transaction. Who approves the related party transaction? Is it the same person that has relationship or another person? To be able to check the controls, okay? Next, the authorization and approval of significant transaction outside the normal course of business. Who approved transactions that are outside the normal course of business, extraordinary transaction or extraordinary item. For instance, you want to sell a car, company's car, to a related party. The car, the fair value should be around 10 million. But because it's a related party, you sold it for 3 million. That's what we are talking about. Okay? Those are exceptional because the main essence of the business is not to sell car, it's to carry out business. But they have to sell the car. That's an extraordinary item. Right? Hope we are together. Okay, so but the whole essence of the related party transaction is to ensure that the information related to related party transactions and related party itself are fully disclosed. And what? Fully disclosed and what? Presented. That's where we are going to stop for today. Okay? It's 10 o'clock. We're going to stop here for today. So continuing from other aspects of audit evidence in the next class. Okay, like I said, it's going to be supposed to be a very long class because it's one of the most onerous aspects of the syllabus. We'll see what we can do. All right. But at the end of the day, I expect that everybody will obtain value. Okay. Everybody will understand what we are trying to achieve at the end of the day. So does anybody have any question, comment, observation?